NRI.
Whether intricate or in investments, the one who stays put scores more. Similarly, when you stay invested for a longer term, you tend to experience lesser market volatility and your chance to earn higher returns maximize significantly. At Paytm Money, the Systematic Investment Plan or SIP lets you invest in mutual funds in a convenient and disciplined manner without you having to stress about timing the market. In no time, with compounding, these smaller SIPs grow into bigger corpus to turn your financial goals into a reality. Invest in your preferred mutual fund today with an SIP of as low as ₹100. Just download the Paytm Money app from the Play Store, get your KYC done and become investment ready instantly. अब म्यूचुअल फंड्स के लिए भी Paytm करो.
Welcome to Paisa Vaisa. I'm your host Anupam Gupta, B50 on Twitter, and I hope all of you are staying safe. And as always, our gratitude and thanks to all the frontline workers who are battling this fight for us, the civic authorities, the health authorities, the police, and everybody else who's ensuring that we are staying safe at home during this crisis. Okay, today's episode, big one, really special, right? Because it's a topic a lot of listeners have asked us about, and I've also been trying to get someone to do this topic for us, which is basically strategies for NRI, which is non-resident Indians. So for all of us, for all of the listeners out there who've asked for this, here's one attempt at doing this. I'll try and do this over and over again as much as I can. But I've got a really special guest. My guest today is himself a Paisa Vaisa listener. So thank you for listening to our show, Mohit. So Mohit Agrawal, all the way from US in San Francisco, where I believe it's 10:30 in the night. So Mohit, welcome to the show. Thank you so much for doing this for our listeners. Let's start with the background.
Thanks a lot, Anupam. First of all, thank you. I'm a Paisa Vaisa listener myself, a big fan of your podcast. So it's a pleasure to be on your podcast.
Thanks a lot.
So I'm currently living in the Bay Area. I am engineering manager at Wealthfront, which is a fintech company based out of Bay Area. And basically, we are trying to build a next generation banking service here. I've been living in the US for last 10 years. Like 5-6 years ago when I got married, I started getting more into personal finance because that's when I started thinking about how to plan my future, my financial life, retirement, and financial security. And that's when I started getting into personal finance and have been trying to learn about it ever since.
Great. So now let's start with the show. Working for Wealthfront, I'm sure you've already got a very good idea about the various asset classes that are out there for people to invest in the US, the process of investing, taxation, and of course, being an Indian or an NRI yourself, I'm sure that you've thought a lot about this. And I think that I read your Medium post, which you had sent to me when we had connected. So that's fairly lengthy. We'll try and put in a link to that once this episode is out. So Mohit, let's start. Let's start with a very, very, very basic question. What are the avenues of investment in India for NRIs who are staying outside of India?
So Anupam, for NRIs, the avenues of investment are mostly same as avenues there are for people living in India. NRIs can invest in real estate, equity, stock, bonds, mutual funds, gold, all those common assets that Indian people do. The only restriction is there for US and Canada-based NRIs, where they have a limited set of mutual funds availability. They cannot invest in all the mutual funds. But
great,
it's pretty much same for the people in India. Yeah.
And how do you get started?
So to get started, generally the easiest thing I would recommend is a lot of people invest in stocks and mutual funds, SIPs. So I generally encourage people to just start with a Demat account with whatever bank they are working with in India, wherever they have NRE or NRO account. They should just open a Demat account and they can get started investing.
Okay, and the bank would ask them for whatever necessary documentation, and that should be easy to provide. So setting up this Demat account should not take too much of time.
Yeah, if you have NRE and NRO account, the bank have already put in that effort to get all the documents from you. Especially for US and Canada-based NRIs, they might ask you some more documentation because there are some extra reporting that they have to do to US and Canadian government.
Okay, great. You mentioned that there are only a few mutual funds that US-based NRIs can invest in India. Can you tell us these?
Yeah, so there are I think 8 or 10 mutual funds houses that allow you to invest in India. I can try listing them like Birla, Sun Life, SBI, UTI, ICICI Prudential, L&T, Sundaram, DHFL, PPFAS. So these are the mutual funds that allow NRIs based in the US to invest in India.
And that is because of FATCA, what's called what is FATCA? What does it stand for?
So FATCA is, I generally call it FATCA.
Nice one.
So it's Foreign Tax Avoidance, Foreign Tax Account Compliance Act. Basically, this is a way U.S. government imposes all the worldwide, whoever lives in the U.S. This is how U.S. governments keep them accountable whenever they keep their assets abroad. So they have treaties with governments all over the world where those governments will provide them the data of U.S. residents, like financial account data of the U.S. residents. So like I have accounts in India. Indian government is reporting all my accounts and my financial transaction to U.S. government if they meet a certain bar, like $10,000 something. So those are all things are reported to the U.S. government.
Okay, great. Next up, this is a question that I get a lot. So I have two options. One is I can just pick up, I can just buy an Apple, Amazon, or Google or Facebook. So that's one option, that is directly investing in the US. And then in India now, a whole host of options have come up. I just did a show with Pratik Oswal at Motilal Oswal when they were launching the S&P 500 index fund. They even have a NASDAQ 100 fund, a NASDAQ 100 ETF, I think, I'm not sure which one. And a lot of the mutual funds have also come up with feeder funds, like a fund of funds. So what's your view on this? What between these two, what do you think is more preferable?
I mean, it all depends on where you are based out of. Like, so suppose, for example, if you are based out of if you live in the US, then I would just say you should directly invest in the US market through your US investment account. If you are based in India, then I think this is like the fund that Pratik Oswal talked about, the S&P 500 fund that they added. I think these are one of the really good opportunities for Indian investors to invest in, because this exposes you to the US market, and S&P 500 is like one of the best performing assets all over the world. I mean, the biggest hedge funds are trying to beat that, and most of them are not able to beat it. So I think these are really good opportunities. The other thing is if an investor is based out in, say, suppose Singapore, Dubai, then they should definitely look into these options. Like, they should try to invest through Indian accounts. But one thing I always recommend is if you can invest in US securities through your local market, suppose if you are in Singapore, if you can invest in US market through Singapore Stock Exchange, then I would recommend you to do that, because the currency exchange can cost you a lot of times. So you want to minimize the currency exchange that you do when you're investing. So if you are living in Singapore, don't send your money to India and then invest in US market. Try to minimize the currency exchanges.
Okay, got that. So now, one question for NRIs who are investing in stocks in India. Let's say someone is buying a Reliance or an HDFC Bank or whatever it is. How does tax work out here? When I'm buying and selling stocks, because I know there's something called double taxation also. So briefly, how does this work? How does the taxation aspect work for an NRI who's buying Indian stocks, buying and selling, obviously?
Yeah. So I can answer this question for US-based NRI specifically. What happens is if you are doing security trading in India, whatever taxes you owe in India, you have to pay those taxes. Whatever taxes according to Indian tax code you owe, you pay that to Indian government. And then when you are reporting your taxes in the US, what you have to do is you file your taxes based on your capital gains. But then whatever taxes you paid in India, you apply for credit with the US government. So under direct tax avoidance agreement, you can deduct whatever taxes you paid in India and get credit for it, so that you don't get double tax.
Okay, and there is also a concept of withholding tax, I think, but that I think is more for people staying in India out here, right?
No, so I think some of the mutual fund houses in India, they withhold taxes, but ultimately whatever they withhold, I mean, whenever you're filing your India return, you can account that. Basically you just pay taxes in India and then get credit for that in the US.
Okay, can we do an example out here? Maybe, I sold X share. So I bought X at 500 and I sold it at 600. So I have 100 rupees of capital gains. Any way that we can have a handle on what would be the taxes out here? And let's say it's more than 3 years or whatever.
Yeah. So I won't exactly know what exactly tax details are in India. But say suppose you have capital gains of 100 rupees and you have to pay 20 rupees capital gains tax in India. So you pay that 20 rupees capital gain tax in India. And then what you do is like for US government, you report that you have 100 rupees or you convert it to dollars, whatever it is. So say suppose 100 rupees is your capital gains. You tell US government that you have paid $20, 20 rupees to Indian government already. And say suppose if your US tax liability was like 30 rupees, then you will just pay 10 rupees taxes in the US. Basically, you don't have to pay double taxes. You just like owe whatever you owe in the US. Because what happens is like when you live in the US, you pay taxes on your global income.
Okay, great. Okay. Now moving to SIPs. Let's say that someone in the US or wherever in the world wants to start an SIP in an Indian mutual fund, which is one of those that you mentioned earlier in the show. How will that work? Are there any platforms that are supporting direct mutual fund investments through SIP? And more importantly, do you need a demat account for this? Because sitting out here in India, I don't, for an SIP, I don't actually need a demat account. How does it work for an NRI?
Yeah. So for NRIs, like all the funds that I mentioned, like mutual funds, they allow you to directly invest in those funds and have SIPs with them. That is always an option. And then you can also use demat account to invest in SIPs.
Okay, so any platforms that, is Wealthfront planning to come to India by any chance for this?
No, I don't think so. But any platforms, a demat account generally, like Zerodha, I think is a pretty common platform in India. They also started supporting NRIs. And you can use HDFC, ICICI, all the regular demat provider. You can just use them and open a demat account with them.
Sure. So best for the listener to actually go reach out to their bank and ask them this question. Do you support this? That's a better way to figure it out.
So, okay. They are giving you NRE account.
Sure. Go on, please.
Yeah. So if a bank is allowing you to open an NRE account, NRO account, most likely they will allow you to open a demat account.
Okay. Now, again, I'm living in the US. There is a concept called a 401k account, which I think is similar to the Provident Fund concept that we have out here in India. So how does this work for me? Should I be investing in that 401k account if I actually plan to move back to India? Or should I just not do it? How does that work?
That's a really great question, which most of the people who move to the US from India struggle with. Because a lot of people, when they move to the US, they don't plan to live here long term. So the way I think about this is like, it's all about like time horizon. If you plan to stay in the US for like 5 years or less than 5 years, then I would encourage you to not invest in 401k because you would ultimately have to do early withdrawal and whenever you move back to India. So generally what I say is like if you are living in the US for more than 5 years, then definitely take benefit of 401k plan because especially if your company is allowing you to do 401k match, which basically is whatever you invest in, the company kind of matches it up to 3 or 4%, depends on the company. So, I definitely encourage people to do that because if you are staying in the US for a long time, invest in 401k and then you can definitely minimize your taxes whenever you move back to India when you repatriate these funds.
That's actually the next question. Well, how does a repatriation work? Let's say that I have a 401k account. There is something called an IRA account in the US. I'm done with that. I've probably stayed there for 5, 10, 15 years. I don't know. So I've accumulated a sum out there. And now I've moved to India. So should I be moving that money to India? What are the tax consequences of moving that money to India? How does that work? Especially say for someone who's been there for a long time and then moves out here.
Yeah, it's a great question. This is a big planning exercise that a lot of people have to do when they are moving to India. So generally how it works is like whenever you have 401k account and you plan to move back to India, Most likely, the recommendation is you should repatriate those funds back to India. The good thing is like Indian government has this specific time period, like specific status, which is called RNOR, which means resident but not ordinary resident. This time period is around 2 to 3 years based on how long you have lived abroad. So what you can do is whenever you move back to India, in between those 2-3 years, you can start repatriating your 401k amount back to India, and you don't have to pay any taxes on that from the Indian government perspective. But from the US tax code perspective, you will end up paying early withdrawal if you withdraw before 60 years of age. But the good thing about this is like if you divide your 401k account amount in 3 years, you can probably reduce your US tax liabilities. So that's how I would generally recommend people to move their money back to India.
Yeah, because I've had a lot of friends. So this happened in 2008, 2009. I think when the recession had happened out there, a lot of my friends who had gone there in the tech boom, in the early tech boom, back in 99, 2000 for the Y2K thing, and who had lived out 10 full years out there, I think they probably lost their jobs and decided to relocate out here. So that, and 10 years was a long time. So, just to recap that once again for our listeners, because who knows, I hope not, but if anybody is moving back to India from the US, could you just say that once again so that our listeners are clear on that? What should they do?
So what I am saying is like, if you are moving to the US, then use like 2-3 years opportunity that Indian governments give you to move that money back to India, because for those 2-3 years, the special status where you have, which is called RNOR, you can move that money and you don't have to pay any taxes in India, which is like the best way for you to save some money on taxes. If you move your money back after those 2-3 like that special status, then you will have to pay taxes in India also. So you end up paying double taxes, because you pay whenever you withdraw that 401k money in the US, you have to pay US government also the taxes and penalties.
Great. So we're going to take a break here, folks. We are going to cover a few other topics on the other side of our recording today. We're going to talk about NRE, NRO accounts. We're going to talk about real estate and much more on this really special episode of Paisa Vaisa with Mohit Agrawal, the NRI special. We'll be right back.
I want to thank Intel for supporting our show. We're all loving working from home, but let's be honest, there are complications to this. For example, getting help from IT folks if your PC is down can be a challenge because you can't just walk up to the IT support desk anymore to get your issue sorted out. Well, you'll be happy to hear that I have a solution for all your work from home pains. The Intel vPro platform. The platform comes packed with Intel Active Management technology that lets your IT teams remotely manage your system, fix the problems even when the PCs aren't near them or are unresponsive, especially with the reduced desk site visits. So it means more time getting your work done and less time spent on getting support. What's more, the vPro platform also maximizes all your PC security, stability, and performance needs. Visit intel.in/more with vPro, that's VPRO, to discover how you can do more of what you want and less of what you don't. If you're listening on the IVM Podcast Android app, you will be able to click the link that's visible to you now.
And welcome back to this really, really special episode of Paisa Vaisa, the NRI special, or strategies for NRI special. My guest, Mohit Agrawal, an engineering manager at Wealthfront, someone who's worked in a few startups and who's been living in the US for the past 10 years, has researched this topic, has done enough of his own work on answering a lot of questions that I've gotten from our listeners. In the first part of this episode, we spoke a lot about equity investment, mutual fund investments, what you can invest, what you can't invest, how do you get started. And in this part, we're going to talk about a very basic banking concept for NRIs, and that's called the NRE and the NRO account. Mohit, let's start with that. What exactly are these accounts? How are taxes applied to them on the interest that is generated? And do I have to pay taxes in the US on these NRE and NRO accounts?
Yeah, it's pretty basic and a lot of people struggle with it in the beginning. So NRE account is like a non-resident external account. This is the account which you use when you're sending money from abroad. NRE accounts allow you to hold your money, like whenever you send money to India, you can keep that money in INR or you can keep that money in foreign currency. And that money, the good thing about NRE account is like the money that you keep in NRE account grows tax-free in India. Indian government doesn't charges you any taxes on that. Same goes for NRE FDs, where if you have NRE FD, then you don't pay any taxes for that in India. On the other side, we have NRO account, which is non-resident ordinary account. The way I think of this account is like, this is just an operational account that you want to keep in India. If you want to, like, say, suppose move money around in India, if you have some Indian income like rental income, then you can get all these things deposited. In NRO account, the interest, whatever interest you gain, the interest is eligible for taxation in India. So, like, the banks would withhold, do tax withholding on the interest payment, and then you will have to file your returns in India. Now, in terms of from the US tax perspective, whatever interest income you have in NRE or NRO account, you will have to pay taxes for that in US also. But if you remember, in NRO account, you have to pay taxes to India. So whatever taxes you pay in India, you can get credit for that when you're filing your US taxes, so that you don't end up paying double taxes.
I want to talk about fixed deposits, Mohit, right? Because India's fixed deposits rates are much higher than what we have in the US. The US is hardly anything. But I think one very lucrative opportunity for NRIs anywhere in the world is to have a fixed deposit sitting out here in India. And if I recall correctly, back in 2013, when the current account deficit had a bit of a crisis in India, a lot of banks had opened a very special kind of a deposit for non-residents. So just walk us through these fixed deposits, which are actually a very big source of an opportunity of investment for NRIs. How do they work?
Fixed deposits are, when you think about percentages, I think they are like really good way to gain some interest on your money. They work just like they work for people living in India, where you gain 7-8% whatever interest there is. But the way I think of it is like, I don't think of it as 7% return, because you have to account for currency exchange as well. Like if you had made fixed deposit of 1 lakh rupees, that was like the currency rate was like dollar was like 50 rupees at that time, so that was almost $2,000. But now when you think about it in dollar terms, it's if whatever returns it gain, the same amount is like pretty less. If you think about dollars, it's like $1,300-$1,400. So whenever you do fixed deposit, you should not think about 7% returns. You should also think about what you are paying in terms of currency, because Indian currency, when you compare to the US dollars, Indian currency has been like losing for some time. So definitely account for currency also. Whenever you are making fixed deposits, don't just go by 7% or 8% interest rate.
Because the actual could be probably a little bit lower after you account for currency depreciation. Okay, great. Yeah, real estate, real estate mode. How does that work? Because I thought that might be very, very complicated, for anyone staying in the US or any part of the world to invest in Indian property. How does that entire thing work, especially on the taxation side? Because NRIs have invested heavily in Indian real estate. How does the taxation work there? Yeah.
So just like anything else, I think real estate also work in similar way in terms of taxation. Indian real estate is one of the best investments that an NRI can make, I think, because of the Indian real estate market. And in terms of the US taxation, whenever you sell real estate in India, you have to pay some whatever capital gains taxes are in India. For real estate, you pay these taxes in India. And then you have to report that income as income in the US tax return as well. And you get a similar credit of like whatever income taxes you paid in India, you get credit for that. One thing you also have to think about is like whenever you sell property in India, and if you are trying to repatriate those funds in the US, you have to be really mindful of like how big of that amount is in the US. It just works in a similar way where you get whatever taxes you paid in India, you will get credit for that in your US tax return.
Okay, and this is part of what is called the DTAA. You said that's what the double.
Yes. Yeah.
So what exactly is that?
Double tax avoidance agreement. So that it was built, designed so that you don't end up paying double taxes in two countries.
So for the same income, you shouldn't have to be taxed twice. Okay. So Mohit, one question that I got from a listener is that his long-term goal is to retire in India. after working, for a majority period of his career in all over the world, maybe US, UK, wherever it is. So how does this work? If I'm going to be retiring in India, should all my assets actually be in India throughout my investing lifetime, or how will that work? I know that there is actually no black and white answer to this, but here's the situation. I'll just, make it clear for you. Someone who plans to travel and live across the world for his career, and at the age of 55, 60, 65, finally retire in India. What portion of the portfolio should be then allocated to US or foreign assets?
As you said, there is no black and white answer. The way I think about this is you should keep your assets, money assets, closer to wherever you are. So if you feel like you are going to spend major chunk of your non-retired life in the US or abroad, you should keep your assets there. And whenever you plan on moving back to India, you should move those assets back to India. There are always ways where you can minimize taxes, especially in R and OR status, when you move that money back to India. But try to keep that money wherever you are, closer to wherever you are. And in terms of asset allocation, I would say your asset allocation should depend more on where you live. If I am based in the US, then I should definitely plan for a high US allocation. If I keep my assets in India, then I would probably design my portfolio around how people allocate their assets in India.
Great. So folks, just a small disclaimer out there. Consult a financial advisor. A lot of this is very individual specific, and do reach out to someone that a professional who can handle you through these very important financial decisions, especially ones that that pertain to retirement and financial planning. What Mohit has said is at a very generic level, but please have it modified and specified to your individual needs. With that is a wrap on this episode of Paisa Vaisa, the strategies for NRI special. We're going to keep on exploring this topic as we go along. Mohit, you're also on Twitter. What is your Twitter handle?
So my Twitter handle is Mohitify, Mohitiify.
Great. So if you guys have any follow-up questions, maybe you can reach out to Mohit out there. He's a very helpful guy. Mohit, big thank you for doing this for us all the way from San Francisco. Our first recording, by the way, with someone who's sitting in the US, where I believe it's now 11 in the night. Mohit, thank you so much for doing this for us.
Thank you, Anupam. It was great to be on podcast. I look forward to keep listening to your podcast.
Thank you so much.
Thank you.
No material on the show should be considered as financial advice. The material on the show is for informational purposes only. Please consult a financial advisor before taking any investment decision.
I hope you enjoyed that show. I'd like to thank our sponsors this week, Paytm Money and Intel. We appreciate their support. It's been a fantastic week on the IVM network. I hope that you've been checking stuff out, but some of the highlights that you definitely should check out. Ashish Vidyarthi, host of Begin the Journey, was on Cyrus Says. They had a really fun conversation. I think you'll enjoy that. Uncle Please Sid did an episode around development, which was really, really fun. On Edges and Sledges, we had Adam Holyoke, former England captain. While those guys are killing it, one cricketer after the other. Definitely do check out Advertising is Dead. We talk about esports with some really guys who really know that space. Smile India, absolutely right. These guys are killing it as well. So is Pawan at Pragati. Don't forget The Original Things. Again, one of my favorite shows. You must check that out. And thanks for listening, and we hope to catch you again next week.
Look, up in the internet. It's a meme. No, it's a cat video. No, it's the Geek Fruit Podcast.
That's right. We interrupt this riveting broadcast to tell you about our show, The Geek Fruit Podcast, where Tejas, Dinkar, and I, Jishnu, talk about everything in pop culture, including DC, Marvel, Star Wars, Netflix, and everything in between.
You know how your friends hate it when you ramble about some nerdy crap and you just want somebody to listen to you? Well, sorry, there's nothing we can do about that, but come listen to us ramble and it'll almost be like the real thing. Kind of.
Listen to new episodes of the Geek Fruit Podcast every Monday and the Geek Fruit Bulletin every Thursday on iTunes, Google Podcasts, the IVM app, or wherever you listen to podcasts. Happy listening, you nerds.